In this video, I'm going to talk about using the position relative to the prior day's range to act as a filter. Stay tuned. Hey traders, a very warm welcome to. So one for the day traders here, or actually, you know what? One for the swing traders who are going to use a day trader's entry to kind of hold the position for multiple days, weeks, months, whatever it may be. But the entry is from a day trading perspective. So what are we talking about here and how is it going to help? The prior day's range, whatever we're trading, is a very useful guide to give us as not necessarily a trigger to take a trade for the next day, but more a filter to kind of narrow down the type of trades we're looking for. Let me explain a little bit further. So if we're trading a currency pair here, we have the low of the day on this prior day. This is kind of day one, if you like. The prior day, we've got the high, the dotted red there, and a midpoint, approximate midpoint, just by eyeball, but you'd have a properly calculated midpoint there with another slightly dashed red here. And a close at this level here. And obviously, if you're trading a currency pair, you've got to find the close and you've got to put it on your chart yourself and pinpoint where you think the close is, with the best position for the close. If you're trading an index, much easier, a stock, much easier, and you might well get a gap as well. So you've got this kind of situation. Now, the next day, you want to use the prior day's information to help guide your decision making for this next day coming up. So you've got your high, your low, your close. If you're in a trending environment, you're in an uptrend, say, you may want to add some filters. This is some sort of suggestions for you. You may want to say, hey, if we're in a trending environment and we're above the high, I want to only look for longs because we now believe that we have some strength back into this market. Perhaps we've been trending up beforehand. Perhaps we've been in a range for a little bit. And now I want to kind of use that trend methodology of when we go to a new high, we chug on even further. And there's our new high. Let's make it red. So I'm going to wait until that happens, and then I'm going to look for longs. And then you add your kind of trigger strategy, whether that's some sort of momentum bar, whether that's pull back after a push higher, maybe pull back to it, whatever it may be. But the point is, you filter out and say, hey, I'm just not going to take any short trades now because the trend is up. We're in a trending environment. We've had our kind of congestion day here, and now it makes sense for me to align myself with long as we push on. Vice versa, if we're in a range, you've been in a range bound environment for a long period of time and you're trading a mean reversion, let's say your mean is wherever it may be, you might say to yourself, hey, above the high, I want to align myself with short. And you might not want to take anything unless we have that scenario, because you know that history said the times we kind of break above prior day's high after having a 2 or 3 day move to the upside and it's range bound conditions is a good time to get short. So it's keeping you, number one, from getting involved with trades that aren't really the right trades to get involved in. You might think, yes, this is a great trending environment, but you might end up trying to get long too early. And obviously in this example here, if you got long here, you'd be fine. But you may historically, the point is you make the rules based on historical nature of the chart. And if historical nature of the chart, which is with most trends, as it pushes above the high, it goes on for another leg, it goes on for another leg. Perhaps you'll want to wait for that before you get long. Another thing you might want to say to yourself is you might want to split the prior day up into quarters or into thirds. And you might want to say to yourself, hey, listen, you know what? If we are in the middle half, I say it's a half, it's 2 quarters really, isn't it? Because you've got either side of it, or if you're a third. If I'm in this section here, there I draw on this chart, ruin it. If I'm in that section there, I'm not going to get involved in it, because even though perhaps we're in a trend, maybe we're still congesting and we're still backfilling, and I don't want to get involved in chop. I want to see momentum continue before I jump on it. Maybe even in a range bound scenario, it's the same situation. It's quiet. The market's chugging along. It's doing not a lot. In that middle chunk, no one's really bothered about it. It's back and forth, back and forth. It's tradable. Possibly, but is it going to give you that true edge as a kind of extension out of a range that really runs out of puff and comes back into that middle range? No, it's not. That's going to be the area you're covering your trades and using that as a mean, as opposed to an area to kind of initiate trades. So you might say that scenario. Another thing is, adding to this things like average true range. So if you say, okay, I do want to be long when we're above the high and I want to align myself only with those buy side trades, you do also want to be careful and add another filter in there that says to yourself, hey, you know, as long as we are a current range, I'm going to put range here, is currently less than, you know, the ATR or expected ATR, in other words, the expected range of the day, because what you don't want to do is chasing stuff to the high side. But the point is, you know, I've just given some ideas and suggestions here. It's very, very powerful to use previous day's price action to frame the next day's trade, to stop you taking substandard trades in noise, to stop you getting involved with things that aren't yielding the highest profit probability, and to just kind of, you know, align yourself with the market conditions as well. A final thing to point out, guys, is that often if you have a range bound environment, you might have identified that the next day is going to be a range type day. Perhaps you had a volatility compression here, whatever it may be, but you say to yourself, hey, I don't really want to chase stuff. I don't really want to play this game above the high. That's not me. I prefer to play stuff that's fake out territory. So you would say to yourself, hey, I'm only going to take stuff in the bottom third of the prior day's range, because I believe we're going to come down. Maybe we're going to do some testing on the downside before we go into a trend day. So I want to be right on the bottom of that trend, and I've identified that, I've analyzed that, and how do I help that decision? I know my trigger, maybe double bottom, some sort of support, but it's got to come in that lower third that I've identified from yesterday, or lower quarter in this example, or lower half, or whatever it may be. If it's up there, I don't really want to take it because I feel like I want to take some out of the day, scale some out before I hold it for many days or months or weeks or whatever it may be. So even though that's now got busy, hopefully you've grasped the idea of using that prior day to add a framework into your next day. It's worked very, very well for me over the years, you know, intraday trading the DAX, intraday trading crude oil, this kind of just not overcomplicating things and just saying, hey, very simply put, you know, is this in a position that I want to take it? Is it in a position I want to take this type of trade? And just really clearing out a lot of the decision-making process and not the cognitive load we have on. I don't think about going long or short or whatever. I just have say, hey, when it's in this zone, I'm only looking for longs. When it's in this zone, I'm only looking for shorts. And I'm not looking for shorts because the 5-day, again, my 5-day filter has said I'm only looking for longs. So it makes my life easier. Can I find a trigger long in this area when price gets here? Yes, I can. Great, I'm in. What's my risk? All the stuff done. No, I can't take a trade. I'll wait for the next one. Be patient, patient, patient. And your mind works better anyway when you've got those boundaries as well in place. So one idea for you guys is framing that day and using the position of price relative to the prior day's range as a filter. Comments in the comment section below. Thumbs up if you like this kind of stuff. Subscribe if you haven't yet. Greatly appreciated. Thank you guys. See you in the next one. Take care.